Hi, and welcome to the Chartis panel on Revolutionizing KYC, Unleashing Advanced Data Management for Precision Identification. KYC has long been a challenge for financial institutions. High fines, correspondingly low risk appetites, and a lack of verifiable information has meant that it has been characterized by repetitive busy work and high false positives. As regulations have become more granular, while the data environment has become more complex, it's a challenge that has only grown in scope. I am Philip Mackenzie, Research Principal for Chartis Research, and we have a great panel today. With me, I have Frankie Shuai, Chris Green, and Nick Parfitt. Just for some introductions, Frankie.
Yeah, happy to be here. I'm based in Singapore. I'm the Regional Chief Information Security Officer for One Asset Management in the financial industry. Happy to be here and learn and share.
Nick.
Yeah, thanks, Phil. Very nice to be here as well. I'm Nick Parfitt. I work for Feedzai as Principal Subject Matter Expert in our AML solutions.
And Chris.
Hi, everyone. Yeah, great to be here. Chris Green, I'm founder and CEO at Xapien. We're an on-demand research platform.
Fantastic. Thank you so much, guys. So without further ado, we're going to be taking a brief walk through some of the challenges and the new technology being used to manage those challenges, and also what we kind of expect the near future of KYC to look like in space. So starting from the beginning, what do we really think has changed in the KYC space in recent years? So Chris.
Yeah, what's changed? Well, I think, stepping back from it, it feels like there's a kind of growing realization that actually KYC in itself is a bit of a misnomer. We have institutions run KYC processes, but usually they're none the wiser about their customer. They've followed a process, but to really know your customer, the challenge is the information isn't one place. So to call one screening database, you're not going to get the answer. You might work out there's something terrible. But to really know your customer, it's a research problem. And so there's always in our world been this kind of artificial choice between screening and, database lookup and then manual enhanced due diligence. And the problem with that is it's kind of expensive and time consuming. So again, the kind of realization KYC is not really KYC, but the other thing that's changed then is the advent of AI now allows kind of on-demand research, the kind of heavy lifting that a human would have had to do in the past. And so, we talk about 7 days now becoming 7 minutes, and it's a very hard problem. Clearly, what it requires to do that kind of really know your customer, it requires a fusion of structured information. So things like corporate records and officerships and, screening database together with unstructured information, what is out there in media and the Panama Papers and blogs and those sort of things. But actually what that unlocks is the ability to operate in a fundamentally different way. So, we maybe get into that further down, but I think that kind of ability to do on-demand research, given the advent of AI, really exciting change.
Cool. Very, very interesting. And more than the processes and what corporations are required and financial institutions are required to do, how do we think the data environment has changed for KYC? And how can FIs really deal with gaps in their KYC data or unevenness in the data landscape, whether that's gaps in regional data or gaps for like individuals or corporate structures? How has that really changed over the last few years as well? Frankie.
Great question. We know data is a new oil in the digital economy. So regarding the data landscape of KYC data environment, we have seen the landscape has become more dynamic. Let me share 3 shifts here. First shift is from static data subject name screening to the dynamic name screening plus behavior-based risk scoring correlation and big data analytics. One simple example is the geolocation data and customer pattern could be seamlessly integrated into the anti-fraud solution nowadays. If your customer typically has an online login or online transaction, mainly from country A, but one day after customer login from country A, within 1 hour, there's another login from country B on the same account, which typically will take 4 hours air flight to travel from country A to country B, then the current emerging AML solution is able to flag this out easily. Second shift is KYC data no longer sitting in silos in the individual financial institutions. There's a positive trend. We have seen that the regulator-driven and industry welcome joint efforts are coming to tackle the KYC AML challenge in this industry. For example, in Singapore, where I'm coming from, our financial regulator, MS, has developed a digital platform so-called COSMIC, COSMIC, which stands for Collaborative Sharing of Money Laundering, Terrorism Financing Information and Cases. So regulator has partnered with and onboarded a few domestic systematically important banks on this digital platform, which will allow the financial institutions to securely share one another information on the customers who show multiple red flags that may indicate potential financial crime concerns if the preset the threshold are met. So this will make it easier for the financial institutions to detect and thereby deter the criminal activity. So this kind of the team sports KYC game will be more powerful than the traditional respective financial institutions' own KYC game. Last shift is the data landscape is becoming more fragmented. ML, or more broadly, the anti-online financial crime is no longer the traditional fight with criminals in a people-centric and manual process way, but emerging tech-driven omni-channel fight now. You are no longer dealing with the text data only, but may also have to deal with audio data and the visual data as well. I want to share a recent case happened in APAC region here, which happened in Hong Kong early this year, which is one of the first AI deepfake scams that cost about 200 million Hong Kong dollar, which is equivalent to 26 million USD dollar financial loss. So a group CFO based in UK has been deepfaked, that his facial and audio record in the public has been leveraged and mimicked by the cyber criminals to create a pre-recorded video to trick one Hong Kong-based financial staff to attend a group online meeting with this deepfaked CFO, and then being instructed by the deepfake CFO to initiate the transaction under some claimed emergency situation. So I take pause here, back to you, please.
Yeah, this is obviously one of the major problems with the sort of change in the data environment, is that the complexity both provides a way to have more, sources of truth around an individual. If you're taking multiple different areas of information about an individual, whether that's audio, visual, ID, identity, address, and so on. But it also means that if there's those kind of sources of identification are compromised, then it becomes more easy for a criminal to impersonate someone or to create synthetic identities. So yeah, I think there's definitely a huge amount of complexity that's been sort of born out of this change in the environment. But I think, yeah, other parts of that, including the sort of Singapore consortium thing, I think we can talk about a bit later. But yeah, these are really fascinating changes that I think have made this space just a massive challenge. And yeah, but so kind of when we're talking about and when we're talking about, how do we manage these kind of processes? How do the individuals and how do the banks manage these increasingly complex identities? We obviously have to talk about how the technology environment has changed, because we've looked at an environment where the database structures have changed from SQL and structured databases to unstructured. We've got high performance streaming databases. We've had the shift to the cloud. We've had a huge push within this space, particularly into kind of entity resolution capabilities where, as we sort of mentioned before, the identity of individuals and corporates are attempted to be deduplicated and validated. And we've also seen this massive automation push because the key underlying driver behind all of this is is just for efficiency. So what have we really seen as kind of changing in the technology space? So Nick, I think you want to talk on this one.
Yeah, thanks, Phil. I think we are seeing a lot of change. I think we're seeing a lot of appetite to do change, and it really does depend on the size of the financial institution, its complexity and its scope in terms of what is really achievable, and the appetite to make wholesale changes. And with this advent of so much technology and capability, and back to the point around data, a lot of it, its effectiveness is very much dependent on the quality of data, the systems that are in place, and how available and how accurate the data can be provided and served up. And I know a lot of financial institutions still struggle with this. Others have made really great strides in sorting out their data management layer, which is a perennial issue, which we faced from the get-go in terms of where do we get our data from, how do we validate it, how do we know it's accurate. And there's all sorts of data quality checks and processes in place around that. But it's no mean task. And when we've shifted very much in terms of everything being digital and having great customer experience, being able to validate people in near real time and make decisions in near real time, but stay compliant, it's become a challenge to meet those requirements. So the technologies around things like perpetual KYC are not new, but it's offers up great efficiencies and effectiveness to do that. But it does require data that is as I say, available across multiple sources, and it's clean and it's accurate. And that has impacts on things like machine learning and the use of artificial intelligence, where perhaps systems like transaction monitoring and screening solutions that traditionally and still do suffer enormously from false positive rates, and kind of back to Chris's point around are we actually really understanding who our customer is here? I do think they offer or at least the trajectory now is that banks are far more open to looking at that. But there's been a healthy tension for a long time around the compliance industry in general is a fairly conservative industry with different stakeholders, different competing objectives, and different requirements and needs from technology. So whereas the criminals can always be on the front foot and incredibly agile at deploying these new technologies around deep fake, they're not bound and hindered by regulatory obligations, whereas the FIs very much have to be able to go through model governance processes and procedures. Can they demonstrate and explain this to internal audit, external audit? Can they demonstrate to the regulator? And then you've got as I said, you've got the various stakeholders around that in terms of standing up a business case, and it's complicated, it's expensive. So there are a number of challenges I see to adoption, which is probably explained why, whilst we do have an increasing plethora of fantastic technologies in real world, and the extent to which they've been deployed, I think has been spotty and patchy at best. Things are changing, as we know that certain large institutions, have made bold statements about their capabilities and where they're going, and I think that has now starting to turn a lot of other institutions around in terms of saying, well, what are we doing in this space? And it should no longer be a kind of like a barrier. So it's fascinating times, it really is.
Mm-hmm. I mean, if I can just pick up on something you said there around perpetual KYC and just this problem of false positives. So, I mean, again, I think, we've spent our kind of lives in this industry, and you become inured to the fact that, false positive rates are just incredibly high, with screening solutions. And, and the challenge then is if you're going to register a kind of ongoing perpetual KYC on Chris Green, then, you're going to get hammered with kind of, just all these kind of false positives from all the other Chris Greens. But also, you're going to potentially get kind of regurgitation of information that you already know, even if you get information just on this Chris Green. We regularly, there's news articles about Roman Abramovich and the fact that he owns the world's largest yacht. It's like, well, yeah, we know, I don't need to be told that just because someone's been mentioned. The ideal when we're thinking about perpetual KYC is that you as an institution are told about when there's news about the person you're interested in, but it's new news as well. It's something that the world knows, which it didn't know before. I think that is the kind of that should be the thing that the industry is now aiming for, rather than just ticking a box of kind of doing alerts, because that's kind of deeply unhelpful. But it becomes a kind of entity, really is now an entity resolution problem. And I think that's why so many, financial institutions, technology companies are just coming again to this, question of entity resolution. That it feels like that is going to be a major emphasis over the coming years.
So
Yeah,
maybe
absolutely.
I can jump in a great.
Oh yeah, of course.
Sorry. Yeah, a great summarization regarding technology for KYC. Actually, I have heard one interesting question. Let me share here. The question is, who is the best person has been driving the digital transformation in the past few years? Option A is CTO, Chief Technology Officer, or CRO, Chief Information Officer. Option B is CEO. Option C is CFO, Chief Finance Officer. And option D is COVID. The correct answer is actually D, COVID. So we have seen that COVID has significantly changed the digital economy in the past few years. On one side, we have seen that employees are no longer sitting in the same building, same office, but could connect to the corporate network at any time, at any place, using any device, so-called AAA. And our financial institution clients also change their engagement model with us. And more engagement and transactions are done online by self-service rather than offline people interaction. Go to the bank and talk with the counter service staff. A simple personal experience question actually we can ask ourselves is, when is my last physical visit to a bank branch? Is it last month, or last year, or even longer time before? So all these shifts actually we have observed are backboned by the technology development in the past few years, like cloud, AI, automation, you have mentioned the flips. But all these emerging technologies actually are playing the double-edged sword role here. Why I say it's a double-edged sword role? Because on one side, emerging tech like cloud computing bring us the benefits like cost optimization by paying as usage, scalability, flexibility of the underlying infrastructure resource, business innovation, agilities, etc. AI, especially generative AI, is showing the potential in the marketing, knowledge management, customer service, software coding, decision management, etc. But on another side, when we are on a digital transformation journey, those bad guys like fraud criminals or cyber attackers, they are all answer their digital transformation journey with the same kind of the technology we are using, like cloud, AI, machine learning, etc. So let me share another example. Is many years ago, you might have received a phishing or scam email could be easily tapped by a real person sitting the other side of the world in front of the PC. But nowadays, such phishing or scam email could be easily tapped by robots, tailored and broadcasted with the help of AI. And in the dark web world, there's also selling called kind of the worm fraud GPT, this kind of illegal GPTs, which mimic the real fraud, the GPTs, but integrated with underground restricted data, which then could be utilized by the bad guys to create a phishing website, drop the phishing email, and create the malicious code, essentially. So the technical entry bar to initiate the digital fraud, scams, or cyber attacks has been lowered down. So that's why it's not surprising to see that the digital fraud, scam, cyber crimes volume, frequency, and sophistication has increased significantly in the past few years. Yeah, just share a few points here. Back to you, Philips.
Could I jump in there as well? Just on that,
Yeah,
Frank,
100%.
because I mean, you made in terms of trends. I mean, that's a really important factor. COVID also really drove in terms of the shift to digital and the reaction by fraudsters to people being at home and people being not so much on guard and what have you, and it drove a whole load of typologies and what have you. I think the other, our response to that in the industry has been interesting in the sense that we're putting a lot more reliance on our fraud prevention solutions, upfront in real time to do that detection, and then how does that then flow into the AML side of things as a predicate crime. And what are the confluence or the convergence of digital signals, which I think Frankie you touched on before, like biometric and behavioral, and where these are, payments are being initiated from, or where the communications are coming from, and all of that is really flowing into a central know your customer, central risk engine, which is kind of like the industry's response to a lot of these changes.
Yeah, so absolutely some really fascinating points raised there. I mean, we've from our perspective, we've seen in Chartis, we've seen a lot of solutions which are focused on when mentioning things like the perpetual KYC of and negative news media and this sort of this this problem around the constant monitoring of these individuals. And yeah, it really kind of brings forward how much you run into the same sort of problems of complexity every time you do this thing, because we initially thought of entity resolution as something which needed to be applied to corporate entities, right? Something which needs to bring together to ensure that all your branches and owners and UBOs and things, and or potentially to individuals, to make sure that, you know, your Chris Green is not this other Chris Green. But also we've realized that this even needs to be provided to information. If we're looking at things like perpetual KYC, is that you need to be able to resolve a single news item into ensuring that that isn't duplicated multiple times. You need to be able to resolve the full timeline, essentially, of acts that come to that happen to an individual, as well as having to account for all these different kind of data sources that we're seeing out there, you know, like address or biometrics or any of these other things, which are so yeah, I think as mentioned, yeah, the idea that AI is now in the hands of the criminals as well is a really challenging one too. So I think sort of with that, we move into our last point, which I think is a super interesting one, which is, you know, what do we really think KYC will look like in the future? What do we think it will look like moving forward? Will the data be easier or harder to find or validate? You know, as we look at data regulations becoming distinct across regions, is there a concern that data will become more siloed, that it will be harder to retrieve information from another country? So do we think we'll see more of a regionalized data environment? Do we think tools like generative AI, we've talked a bit about, the risk appetite of financial institutions and how they can be a little bit slow to adopt new technology, and and we know that there are some inherent risks to things like generative AI with potential hallucinations and incorrectness, which criminals might not necessarily care so much about. So, do we think that technology advances will benefit the FIs or the criminals more? So yeah, what do we really think it's going to look like moving forward? And Chris, I think you started us off, so maybe start off the last question here as well.
Yeah, great. Well, I can pick up on a couple of those questions maybe. So, I mean, I know one of the things Chartis have looked at in their research is tools and techniques and focuses spanning different industries. I think you've seen that a lot of the big corporates are starting to look at what financial institutions have done in terms of knowing their third parties, and likewise, financial institutions have been had to broaden their lens when they think about risk, from just kind of financial crime risk into anti-bribery and supply chain and just, all these kind of challenges. And so, I mean, we work across kind of big corporates and financial institutions and law firms and others, and we're seeing this shift kind of everywhere. So I was doing a webinar with a big law firm the other day, and they were talking about the fact that historically they'd have been concerned with anti-money laundering and conflicts, but now they're concerned with broader ESG risk. And so, in simple terms, their language has changed from client onboarding to client selection. And the kind of, what's inherent in that is this is a much, much more nuanced question. So, I think KYC, where is it going to go in the future? Well, really, the question that institutions are asking is, what does the world know that I need to know? That I think is kind of fundamentally the question. And what we're seeing is, things that weren't a risk 2 years ago are now absolutely a risk. And so we can predict with certainty that, there'll be things that will be risky in the future that we're not focused on today. So a very narrow collection approach or a very narrow curation of information, I think, is going to be a challenge. I think we're going to see increasingly KYC is broadened. And really, that should be the question. What does the world know that I need to know?
So can I share something here? Sorry for jumping. Yeah, just one thing that coming together at the beginning. Keeping together is a progress, and only working together is success. So my first point is future KYC will be a team sport. We will see more and more collaboration among regulators and industry players to working closely, may not be just within the country, but regionally, even globally in the KYC world. Just now I shared the Singapore regulator MS Cosmic digital platform. Actually, that's one perfect example. Second point is about the regional and the country data environment. To be honest, it is a trend to some extent in some countries, especially in our APAC region. We do see some countries, they have certain kind of sensitive data has to be hosted within the country. And we also have seen that recently the US president also issued the executive order to restrict the bulk US citizen data to be accessed by certain countries of concern. So sensitive data, including KYC data, will no longer be smoothly cross-border transferring as easy as before. Data localization or only flowing with limited countries is the reality we have to acknowledge. So future KYC has to take this into consideration, and KYC professionals will have to work closely with those other professionals like legal compliance, support professionals, etc., to tackle this challenge as a team. Last point is you talk about the emerging technology. As I shared, it is a double-edged sword. I'll briefly talk about just now the generative AI, and for KYC, generative AI's power in the knowledge management and decision recommendation will definitely help us connect the dots to have holistic picture and understanding the real risk behind, as well as the opportunity in front in a more efficient and more effective way. Back to you, Phillips. Yeah.
Yeah, I mean, that sort of regionalization question is definitely one that Chartis has spent a long time thinking about, because, you know, as we've seen sort of more regionalized data approaches and these kind of consortium sometimes that you've mentioned, but also, yeah, the individual regionalized hosting requirements, we really think that this is going to change both the data environment, but the data environment is upstream of the technology stacks which run these solutions. You know, everyone, it's data technology vendors will sort of evolve to be to align with their local technology stack, with their local data environment, which means that I think we're going to, one of the things that Chartis thinks we will see, and again, this is one of those things that we'll have to see whether this pans out, that this will form a bit more of a regionalized sort of environment for vendors in general, because people will adapt their solution process to the Singapore technology, to the availability of Singaporean data or something along those lines, and that this will only be sort of enhanced by the presence of ID repositories like Aadhaar in India, or the ID repository in Turkey, where, you know, there's something that you can only access if you're in that country. So this is definitely, I think it's a real challenge. It's both, there's both like increasing complexity in this area, but also, you know, potentially it's going to be complexity that's only addressable, that's going to be harder to address outside of your core markets. So I think we are getting close to the end of the
I just sorry, Phil.
Nick, go for it.
Maybe I'll
just
jump in, just add one final sort of thought on this as well, is that, you know, knowing your customer really is at the heart of what we should all be doing. I know it's easier said than done, and compliance is often looked at as being a, you know, business prevention unit rather than a true business partner. And I'd like to see the shift to becoming more about a competitive advantage. We know who our customers are. We know what they're doing and how that relationship is changing, as you know, as is appropriate. So we also understand their end customers, which brings in business opportunities to get closer. And I think that's one of the lenses we should look at, and take a much harder risk-based approach in terms of who are we really trying to target, because there's a huge amount of cost that goes into due diligence around retail customers, which, you know, in essence is a tick box exercise. But I think a lot of cost could be taken out of that with new technology and efficiencies, and make it effective, which could then be better spent on really understanding where the higher risk customers live, and does that align to our business's stated goals and ambitions and culture.
Absolutely. I think
Well
that's kind of a great point to close on. Does anyone, and you know, we've only got, I think, a very short amount of time. Does anyone else have any final things they would like to say?
I'll just echo what Nick just said. I think that's exactly right.
Fantastic. And yeah, I think this has been
do the right thing in the right way. Yeah.
Yep. And I think this has been a really interesting webinar. I think we've covered so many things that we could talk about for hours. I think, you know, generative AI, regionalized information. We've barely touched on things like automation, entity resolution use. So much to talk about in this space. So much changing. Such a complex problem. But yeah, I just want to say thank you so much to everyone. Thank you to Nick, Chris, and Frankie. This has been amazing. And yes, we hope everyone enjoyed this panel and discussion.